Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130. To Washington, D.C., Bloomberg 99.1. To Boston, Bloomberg 106.1. To San Francisco, Bloomberg 960. To the country, Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
Can I just say it?
Say it.
I am crazy obsessed with this story.
You are. Do you think it's because, are you crazy obsessed with this story because you just went through the college application process? And by you, I mean your daughter, so it means your family.
Maybe.
Yeah. Well, I'm obsessed with it as well. Also, some really bold-faced names on here.
Yeah, we're going to get into it. Janet Lauren's going to check in with us from our Bloomberg News team. She follows all things higher education. In the meantime,
Let's get a check of what's going on with the market. Here's Doug Krisner.
What's the story?
I know. Is that a great tease or what? You're sticking
it is.
around, right?
Oh, I'm definitely there. Tim, you were asking about the terminal functionality. One of the terminal screens that I refer to from time to time is MOST. That's the most active. Ford right now, if you can believe this, it's traded nearly 10 million shares. It's the most heavily traded stock in the U.S., up about 1.3% right now. Generally speaking, we've got a rally underway, particularly in technology. Energy shares also showing a lot of strength today. Nasdaq Composite is up by 1.1%. Markets seem to be getting a lot more comfortable with this hawkish pivot on the part of the Fed and what it may mean for the path of interest rates going forward. Today, Fed Chair Jay Powell was saying if the Fed has to raise rates more over time, it will. So there seems to be this growing chorus within the Fed kind of preparing us for a possible rate hike in 2 months. That would be 25 basis points at the March meeting. 10-year Treasury, very little changed in yield terms. Down, maybe a basis point or so. We're at 174, just below 175. Energy tracking the price of crude oil higher. WTI in New York is up just about 4% right now, 81.25. The focus is less on weak demand. Hope here is that we're going to see some kind of recovery, and more on how low stockpiles are. The latest data that we had from the EIA indicated 3-month lows. Later today, we'll hear from the American Petroleum Institute. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much, Doug. Hey, Doug, what was that function?
MOST. And the other one I like, yes, most. The other one I like is the WEI function, World Equity Indices. And so you can click on that, and you can really go into each measure of whatever market you want to look at, whether it's here in the U.S., in Asia, in Europe, and you can get a sense of what industries are moving along with specific stocks.
Love it.
Krisner, we love you.
Thanks, Dougie.
All right, listen, I am obsessed with this story. Doug's going to listen to it. You all should listen to it. It's about the elite U.S. educational institutions. You know, Yale, MIT, Columbia, a lot of others, Duke, many more, too, that are being sued for colluding to limit students' financial aid packages. Tim, I'm like, wait, what?
Yeah, Janet Lauren is joining us now. She's higher education reporter for Bloomberg News. She joins us on the phone from New York City. Janet, fair to say both of us are obsessed with this story. We got to start at the beginning here. What are these elite colleges being accused of? And we should note there are some names that are not on here as well. Harvard, for example, is not on here.
Well, I think you really have to go back to the early 1990s when they really were truly colluding. The Department of Justice had a pretty landmark case against most of these schools, the Ivies and MIT and others. And they really literally were sitting in a room together and saying student X is going to get this amount of financial aid, student Y is going to get this. In that practice, there was a big settlement that you saw in the lawsuit, the term 568, and that was a section of the code that referred to the agreement of these schools. And I think after that, the schools have been pretty careful not to do anything that looks like they're colluding. You know, these are among the most sophisticated operations on earth. And I don't think they're going to jeopardize anything by colluding. However, what this lawsuit says, if I could kind of understand what they're saying, is that perhaps there's other ways where, there may be issues such as if kids get off wait lists, are they, need blind in admissions? Are they giving the benefit to wealthier applicants because perhaps they don't need financial aid? So the lawsuit wasn't entirely clear to me. However, there are some big names. One of the attorneys involved was was a prosecutor in the Varsity Blues case. So, there's a lot of big names in there. And I guess we should explain what need blind admissions is also.
That means. Yeah, talk to us, because Janet, I feel like, that's been a great thing that the schools have put out there. Like, apply, we don't care whether you need aid or not. Just apply, and we're going to look at all of you equally the same. But what does it mean, really?
So what that means is if you are asking for financial aid, these colleges ask you a lot of questions because they don't want to be giving money to families who can legitimately afford it. So they ask you a lot of questions about your income, your savings, your investments. They're not supposed to look at your retirement, but I believe they do ask about that. And some schools count home equity and some schools don't. So you wanted to know why some schools were not on that list. For example, Harvard, I believe, does not count home equity in your formula, so that makes it more generous. So the question is, how does this all work? Is it really true that the colleges don't look at your finances? And they admit you, and then they look at how much money they're going to give you. And it's a pretty expensive proposition for these schools. You're talking about financial aid budgets in the hundreds of millions of dollars. So I think what the lawsuit was saying is, wealthier kids have more of an advantage, which in some ways we kind of already know that. They do take legacies if your parents went there.
But where does the colluding with other schools come into this? Like, where is there alleged to be communication between these schools, between these elite universities and colleges that actually names students?
So these schools do get together as a group and come up with a formula of how they award aid. Not everybody is using the same formulas. For example, Yale may be a lot more generous in their financial aid, but it's adhering to at least a standard formula. And there's a bunch of formulas out there that institutional methodology. The private schools tend to be a lot more generous because they have more money.
So, Janet,
looking at these formulas.
Let me jump in just because we've got about a minute or so left here. But I do wonder. I think students have been instructed that you can apply for financial aid. It's not going to be held against you. But is it ultimately that we might find out that is held against you?
I don't think so. I think the colluding is looking at the formulas, and our wealthier kids deemed, if they get off the wait list, are they going to be full payers? But again, the argument is not entirely clear to me.
What are the colleges and universities saying who have been accused here?
They're not commenting. Like corporations, they typically don't comment on pending lawsuits. But Yale did say, their financial aid policies are 100% in line and legal.
So we apologize, Janet. You've got another story, and we're going to have to tell everybody to check it out online, and we'll put it out on Twitter about schools slashing athletic programs amid financial strain, and students successfully campaigning to revive them by leaning on Title IX, the 50-year-old law. It's another great read and great reporting, and good to just check in with you, Janet. Janet Lauren is our higher education finance reporter at Bloomberg News, joining us on the phone in New York City. You can find her on Twitter at Janet Lauren. Also, just go to Bloomberg.com, check out her stories.
So interesting that she said that one of the prosecutors is one of the ones in the Varsity Blues scandal, because when you and I read this yesterday, it was the first thing that I thought of.
Right? I'm still confused. Like, what are they doing
Maybe you
wrong?
have to go back to college.
Maybe I do. Maybe I have to do a lot of things. I'll just add it to the list.
I'm sorry, that was me.
No, it's the truth. All right, you're listening to Bloomberg Business Week. Let's head back to Nancy Lyons. She's in our 99.1 newsroom in the nation's capital. Save me, Nancy Lyons. Take it away.
All right, Carol. President Biden will try to drum up support for voting rights bills today as he makes a major speech in Georgia. The party is showing greater urgency in light of the anniversary of the attack on the Capitol, with some saying that the nation is facing a turning point. Biden is expected to endorse changing the Senate's filibuster rule. As Bloomberg's Joe Matthew reports, though, there isn't really a path forward for a voting rights bill without that.
They don't have the votes to pass this voting rights legislation unless there's a carve-out in the filibuster. Joe Manchin and Kyrsten Sinema, two familiar names, don't support doing that.
Bloomberg's Joe Matthew in Washington. Some voting rights groups are mad at Biden and will boycott today's speech. They say he needs to stay in Washington and come up with a solution. If Republicans regain control of Congress in this year's midterms, the next speaker could take aim at lawmakers' portfolios.
House Republican leader Kevin McCarthy is reportedly thinking of banning lawmakers from trading individual stocks if his party takes control of Congress and he gets the speaker's gavel next year. A source tells Bloomberg McCarthy's plan could be tucked into the next set of House rules that lawmakers vote on in the next Congress. Current House Speaker Nancy Pelosi has said she does not support an individual stock ban on Capitol Hill because, quote, "we are a free market economy." Nathan Hager, Bloomberg 99.1 and 105.7 FM HD2.
Fed Chair Jay Powell appeared for his confirmation hearing today in the Senate, and he told lawmakers the central bank will not hesitate to act, if needed, to contain inflation. He says if that means raising interest rates more over time, they will. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Master, along with Tim Stanovic, here in our Interactive Brokers studio. Ray Dalio.
Yeah, he's been making a lot of news, especially with regard to China. Here's the latest. Ray Dalio, of course, he is the founder of Bridgewater Associates. It's a $150 billion investment firm. He's urging countries, including the U.S., to narrow their wealth gaps, while at the same time praising China's drive for common prosperity. Yeah, you know, it's interesting. Ray Dalio is someone who has often looked at the greater ills that ail us in society and has written about them extensively. And so what's interesting, we're very critical, I think it's safe to say, or many are critical of what China is doing right now, but they are looking at the gaps just like we are looking at the gaps in society here of the haves and have-nots. I mean, people who have benefited even during the pandemic, wealthier getting wealthier, and then there are those folks who are still struggling to get by, and that gap keeps widening. It's really caused a slide in Chinese equities, especially the ADRs that are traded here in the U.S. There's a number in here that was pretty remarkable. CI China index slumping nearly 23% last year, the worst decline since 2008, with investor concerns about the political and regulatory environment, also compounded by COVID-19. No doubt about it, right? And we've seen, concerns in the Chinese financial market, certainly the Chinese equity trade. Right, and the reason I'm saying that is the connection here is the lawmakers in China, or legislators in China, policymakers trying to rein in this, what they see as excessive spending and excessive wealth. Well, and what Dalio says, he's a longtime China enthusiast, and he was saying all of this via a video link. Here's the quote. First, you get rich, then you make a point of distributing those opportunities in a more equal way. The U.S., through its own system, needs more common prosperity, and a lot of other countries do as well. For China, it's a case of not having some kind of uprising, right? And we've seen it before, and so I think thinking about how do we spread the wealth to make sure that it's vast population, that you don't have some kind of uprising. Inequality is a huge issue. A lot of people agree about that in the United States, but how do you combat it? That's what people disagree about. And last October, you might remember Dalio saying he would be open to paying more tax. We've heard that from other billionaires as well.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
The equity market is trading at higher levels after a choppy start to the day. The S&P 500 seems to have halted a 5-day slide. Outperformer, the Nasdaq 100, which is up about 1.3%. The Nasdaq Composite higher by just under that, 1.29%. Markets, generally speaking, have become a little bit more comfortable with the Fed's hawkish pivot, what it may mean for interest rates. We heard from Fed Chair Jay Powell today saying if the Fed has to raise rates more over time, it will. We're also hearing from a number of Fed officials kind of this growing chorus preparing us for a possible rate hike in 2 months that would be a quarter-point move at the March meeting. Now, bear in mind, tomorrow we're going to get the numbers on retail inflation for December and the numbers on real earnings, and these data points could spark a little bit of a repricing in risk, although for the moment the market seems to be very comfortable with the path that the Fed is on at the moment. 10-year Treasury just under 1.75%. Crude oil is leading energy stocks higher. WTI now 4% higher. We're at 81.40, and the S&P 500 Energy Index right now showing a gain of about 3%. We have shares in Amazon trading higher today after positive remarks over at Morgan Stanley. Morgan seeing an acceleration in Amazon's North American retail business this year. Shares are up by more than 2.3%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Doug, thank you so much. You're listening to Bloomberg Business Week. This week, it's the Year Ahead issue of the magazine. A favorite of the issue is the 50 companies to watch. It's also today's big take. So let's get into it with Rebecca Penty. She is Solutions and Strategy Senior Editor at Bloomberg Business Week, on the phone from the UK, along with Bloomberg Business Week Editor Joel Weber from Brooklyn. Joel, I love this list. It gives you companies you're familiar with, some that you're not.
Yeah, this is an annual favorite at the magazine. And it's a collaboration with Bloomberg Intelligence, and that just bears mentioning at the top because we couldn't do it without our colleagues there. The way that this whole project starts is they take this massive universe of companies that they cover, more than 2,000, and basically start running it through their spreadsheets, and it's just like this gigantic filtering effect to come up with these 50. And really excited about them because they're not hard calls. They're not, buy and sell recommendations. That's not what we're going to get from Bloomberg Intelligence. I think it's more interesting and perhaps nuanced than that because we think of them as just companies to watch. Some of them have positive sentiment, some of them have negative sentiment, but they're just ones that we think in the year ahead are going to be really, really, really interesting companies.
Yeah, so Rebecca, come on in here and talk a little bit about some of these companies here. I mean, the one that jumped out at me was Airbnb, because I feel like I've been watching Airbnb for years at this point after its huge IPO and the way the company was able to recover during the pandemic after laying off so many people. How did Airbnb make the cut?
Yeah, I think Airbnb will be quite familiar to a lot of us who wanted to travel during the pandemic but didn't feel safe at a hotel, for example. So bookings have been up, and interestingly, they've done really, really well with long stays, so people staying for kind of weeks on end. Now, the Bloomberg Intelligence analysts feel like Airbnb sets itself apart from rivals with its brand advantage. So it's very recognizable, and it doesn't even really need to spend that much in marketing. So that's where Bloomberg Intelligence says investors should be watching this company.
Okay, so another one that I love, and by the way, can we just all say when it's like whatever the weather was at 19, it feels like it's like single digits. Like I'm ready for travel, and Airbnb is definitely on that list. So there's also New Year's resolutions. Lululemon, another one that's on the list. It's not even, they're bigger than just athleisure wear now, right, Rebecca? Like their acquisition of Mir has sort of changed what the company kind of looks like. Talk to us more about why Lululemon's on the list.
Yeah, definitely. And I think the idea of working out at home might have seemed like a niche thing before the pandemic. Not everyone has an in-home gym, but Lululemon's acquisition of Mir actually was quite well timed. This is the at-home gym where you can see your workout in the mirror. So like Peloton, they've done really well with that. Lululemon also has in-store events that they've been doing. So really, I guess the point is more than just yoga pants, and that's reflected in the positive outlook.
I gotta say, I'm waiting for somebody to be like, Master, do you have anything else but yoga pants? I mean, I know it's more than yoga pants, but yoga pants and a top, that feels like workwear. Hey, First Solar is also on that list. It's been around for a while. Why is this one all of a sudden popping up on the list, Rebecca?
Yeah, I think one of the things that might be surprising to people who don't follow the solar industry super closely is that it's no longer super expensive. It had this reputation of being, a space that was just never going to get mainstream. But actually, solar is the most cost-competitive supply source for electric power now, and First Solar is the largest U.S. solar panel maker. They're investing at home and abroad, and they've just won a major order from the oil major BP and Lightstream BP, which is a renewables company that BP has a share in. So they're definitely one to watch.
Okay, let's talk a little bit about the Asia-Pacific region and Sea. It's Southeast Asia's biggest gaming and e-commerce company. I think people who, might have been following some growth names in the last couple of years would know Sea because in 2020 it was up nearly 400%, but it did not perform that well in 2021, only up 12%. Why is it on the list for 2022?
Yeah, so the thing with these mobile gaming companies like Sea is that they've got this huge number of players. Sea's got 700 million active players for its Free Fire game. And now it's branching into all sorts of new services, including online grocery delivery and fintech. And so the Bloomberg Intelligence analysts are saying, look, they've got 700 million active players of Free Fire that they can cross-market their new services to. So that's a huge bonus for them.
We haven't, if we're going through regions, we've hit U.S., we've hit Asia. Let's bring it around to EMEA. What's a company with positive sentiment in Europe that we like, Rebecca?
Well, it might be kind of surprising that the Bloomberg Intelligence analysts have picked a tour operator when so many things are still shut down. They've picked TUI. So they are a European tour operator that BI thinks is poised to benefit from a return to travel. And, we all remember Thomas Cook's failure during the pandemic. Investors are a little cautious on TUI because they just want to make sure that it's not going to follow in Thomas Cook's footsteps. But the tour operator's got a restructuring going on. It's upgrading its technology, and it's really changing the way it operates to focus on offering travelers flexibility and access to premium resorts. So that's definitely one to look at as people start to emerge from, lockdowns and go see the sites.
All right, Rebecca, Robinhood. Man, we talked about it a lot last year. What do we need to be thinking about with this one? Because it made the list.
Yeah, so Robinhood is one that we've thought about a lot during the meme stock frenzies in early 2021. But now they're, under the thumb of regulators, including potentially the Securities and Exchange Commission, and there's a big lawsuit in Massachusetts that could help decide their fate and whether they have to impose stricter investor protection rules. So if they lose, that's going to be a big negative for Robinhood. And if they win, well, let's see.
Well, these are a great group to keep an eye on. And really, as you guys just took us around the world, really just something to look about throughout the global markets. Guys, we got to run. Thank you so much. Rebecca Penty, Solutions and Strategy Senior Editor at Bloomberg Business Week. Thanks so much for staying up. I know it's getting a little bit late there in the UK. And Joel Weber, Editor of Bloomberg Business Week on the Access Line from Brooklyn. It's the year ahead issue. I love this issue.
I do too. There were a handful of companies on there I'd never heard of.
Me also,
yeah.
Right?
Oh, okay, good. That makes me feel better.
No, we're both in the dark.
Okay.
A few things. All right, you're listening to Bloomberg Business Week. This is Bloomberg Radio.
Down to the Close, Bloomberg's comprehensive cross-platform coverage ahead of the U.S. market close starts right now.
This is Countdown to the Close. Just 60 minutes left in the trading session. Caroline Hyde, Romaine Bostick, Taylor Riggs, joined now by our colleagues Carol Massa, Tim Stenovic. We are going cross-platform TV, radio, YouTube to discuss, well, Powell placating the market. He seemed to just step back a little bit from, well, the angst that the market had been taken over by as the hawkish tones. He dials them back a little bit.
Yeah, absolutely. You know, basically saying, you know, when your spouse says, I got this, I'm aware, there's inflation, there's all these things, don't worry about it. I saw one of our market watchers in one of our stories describe it, Tim, as Goldilocks in a suit, because he's watching everything and just managing it all.
Look, that's certainly the equity market reaction. And guys, I got to tell you, we're even seeing Bitcoin higher today by more than 3% after a series of declines in recent days.
I feel like you did that on purpose.
I did that for you.
Of course he did.
Because we're going to look at the majors, but you're never going to guess what my chart's about, Tim. Meanwhile, I'm looking a little bit at what's happening in terms of the bid that we get in big tech, up 1.3%, 199 points. Now 200 points higher we go in the world of the Nasdaq as some of those oversold tech stocks just get a little bit of a bid under there. Romaine can talk the technicals there. Dow Jones up 166 points, 0.5% higher for the Dow Jones Industrial Average. I can get my words out. The S&P 500 is up 0.8%. The Russell 2000 getting a bid more than a percentage point higher. Risk on, it feels like.
And it's really this big tech outperformance, Caroline, not typically something you'd seen when we talk about risk on, but you certainly see that in energy, which again is the big outperformer. You're up about 3% on that, but technology closely follows it behind. And this sort of a reversal of everything that we saw last week when it was energy and financials, then maybe tech to the bottom. But at least today, Romaine, you get a push-pull of both of those moving higher.
Yeah, and I think you have to still see a little bit more conviction before we start sort of singing the praises of tech. Amazon is making a nice little reversal here on the day. Those shares are up about 2.4% right now. Intel, which actually, believe it or not, showed some strength yesterday, but then we got that announcement after the bell there that they have a new CFO, the former CFO at Micron, basically David Zinsser at Micron, leaving to join Intel. A lot of analysts pretty bullish on this, saying this is a positive for Intel. The share's up 1.5%. There are a couple analysts, including over at Raymond James, that actually are kind of scratching their heads because they're saying that Intel's problems really aren't financial. You don't really need a CFO. You need operations executives and execution, right? And that's really what they need. But nevertheless, shares right now at $56. American Airlines came out with some preliminary data. Actually looked pretty good here. They're still below their 2019 levels, but it looks like a pretty decent setup into earnings. Going to get Delta Airlines, I believe, on Thursday or Friday, and then U.S. Steel down here on a downgrade, Carol.
Meanwhile, I mean, let's have a quick look at the chart. That I love that Tim always, if in doubt, Tim talks crypto. So do I, it would seem. Bitcoin, but look how much in lockstep some of these beaten up areas, more speculative parts of the market, just moved on Powell's words. Ben Amons over at Medley Global Advisors was saying 1056 was where it was at when Powell said inflation is likely to peak in mid-2022. Bitcoin goes higher. ARK, the ETF, of course, run by Kathy Wood, goes higher. The Nasdaq, too, goes higher, all at about 11 a.m.
Yeah. Goldilocks in a suit. Is that? Did someone really say that?
Yeah, it's in one of our market write-throughs. Take a look on the Bloomberg. Yeah, just kind of saying, Jay Powell watches. So it is, right? It's a great image, and you certainly see it playing out in the markets. What's interesting, Jay Powell, of course, up on Capitol Hill, going before that Senate committee. It was his confirmation hearing, but it really did get into a lot in terms of monetary policy. I think the thing that stood out is Jay Powell talking about being flexible. Here's a listen.
If we see inflation persisting at high levels longer than expected, then we will, if we have to raise interest rates more over time, we will. We will use our tools to get inflation back.
All right, this is what I said. The spouse saying, I got this. Like, if I see there's a problem, I'm going to deal with it. And I think that's what the market, it feels like, remained feeling confident that Jay Powell, they're not going to ignore inflationary signs or any other problematic signals out there.
All right, well, in all deference to Steve Sosnick, the chief strategist over at Interactive Brokers, who coined that term, who we love here, I feel like Jay Powell is more like one of the bears who's testing out each bed, trying to figure out exactly where the economy is, and no one quite knows which bed is going to be the right one.
But we don't know where the economy is going to go, right? We don't know exactly how this plays out, Caroline.
Well, and indeed, if you look at what the World Bank is saying, globally, they're worried about the myriad of uncertainties. We're talking with one of the chief economists over at the World Bank, a director there, who is saying, look, we're in this two-speed economy, whether in the developed nations will still do well, but look, they are downgrading their forecast for 2022, a dramatic slowdown versus 2021, I guess, unsurprisingly. But a lot of that has to do with where monetary policy goes.
Yeah, and different reactions in terms of monetary policy from around the world. I want to go back to what Fed Chair Powell said, Taylor, because I'm wondering what he means by inflation persisting at high levels longer than expected. So is a high level anything over 2%? And what is the definition of longer than expected? Because we're no longer using the term transitory, but what are the timeframes for these things? What are the numbers for these things?
Really good question. I really like what Mike McKee said earlier to us on TV, that on December 15th, we really overreacted to thinking that he was overly hawkish. So now we're overreacting to thinking that he's overly dovish and that everything is going to be okay. And we're always going to be somewhere in the middle. When we talk about a faster taper, you've had a lot of other Fed bank governors come out and say that we are ready to act. A lot of them looking at 3 rate hikes, and maybe that does slow down if you get 2 rate hikes earlier on in the year, and then maybe those rate hikes slow as maybe some of those inflation and growth numbers as well slow in the second half.
Yeah, I mean, and we'll see, though. I mean, I think you have to wait to see what kind of number we get tomorrow. I thought it was interesting. I think you mentioned yesterday, Tim, that the average of economist estimates was something like 7.1% for that CPI print tomorrow. Believe it or not, that's actually come down.
Yeah, I saw that.
And so, I mean, it's only down to 7%.
Right? Yeah.
But the idea here that people are starting to sort of revise down slightly, I guess maybe that gives some credence to the idea that maybe this is transitory.
Right. This goes back to looking through some of these numbers and these data points. Loretta Mester, who Mike McKee also talked with over at the Cleveland Fed, president of it, also said, optimistic, time to start moving, but pandemic, that is still, Caroline, one of our big uncertainties.
And supply chain issues. How's Build-A-Bear doing today, Taylor? You were all in on the rally in Build-A-Bear, posting upgrade to its forecast. Some of these companies are doing better than we expected. Look at the Shake Shack as well.
I wanted it to be the stock of the hour. Yeah. Romaine said, no, we only do fundamentals on the show, Taylor.
We should point out Build-A-Bear was up as much as 14%. It's in the red right now.
Okay. You guys don't ask Carol. Don't ask Carol about her stuffed bear collection, okay?
Yeah, I'm not going to talk about that.
Actually surprised me. I was going to say I'm surprised, but
don't. All right, we'll talk about it at 4, right?
To be To be continued. All right, folks, we're going to join you again at 4 p.m. Wall Street time on radio, on TV, on YouTube. We're going to have Beyond the Bell, our cross-platform coverage. We're going to count you down to the close on this Tuesday.
This is Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
And you are listening to Bloomberg Business Week. Carol Massar along with Tim Stenovic. I think it's interesting, and it is fascinating to see how the markets react to Jay Powell. I don't know whether they're ignoring and thinking everything is going to be okay, but maybe it's just like, okay, everything's okay now based on what we're seeing.
Yeah, how about that inflation estimate for tomorrow, Carol? 7%.
Coming down?
Yeah, it's coming down. It came down by 0.1%. I know I refer to this all the time, but the Fed, of course, is data dependent. Does the tone change if that's a really hot read? I know it's not the preferred method of measuring inflation for the Federal Reserve, but if that comes in extra hot, is that a concern, or is this a sign of it peaking after a 6.8% read a month ago?
You were out shopping recently, and you were talking about certain products not being in the store, there's not being workers, and I do still think that right now we're in this pocket of time where the data is exacerbating, meaning there's not workers and there's not stuff that we want, so those numbers are going to be skewed.
Yeah, I was in a position yesterday, I needed to get something for a trip that's coming up. I went to a big sports store. I had called another one. They didn't have anything in stock, so I went to one. It wasn't the type of thing I could order online because I needed it yesterday. And there were signs up at the retailer saying, hey, please be patient with our staff.
Right.
We have fewer workers than we need. And they were also out of everything.
And unless a ton of workers don't ultimately go back to work and something dramatically changes in our economy, and I guess time will tell on that. We do know the Great Resignation, and we talk about workers really rethinking whether they work or how they work. But I don't know. I don't feel like we still have clarity in terms of clean data points. Tom Keene talking on Surveillance, I think it was yesterday, about original economics. Like, we are making this up as we go, and I love that concept. Like, we have to kind of now make it up again because we have never lived through this type of period, economic period.
Yeah, even Jamie Dimon in an interview yesterday on CNBC calling this a period akin to before the Great Depression, the Roaring 20s, and seeing expansion at those levels.
Right.
So we're talking a century.
And Loretta Mester's talking about the balance sheet. Like it is, you can't even compare it to the financial crisis because it was amped up so many more times than what we saw there. So the rollout's going to be different. All right, let's get back to world and national news.
Nancy Lyons is standing by in D.C. Hey, Nance.
Thanks, Tim. Chairman Jerome Powell says it's time for the Federal Reserve to shift from its economic emergency measures to a more normal interest rate policy. Bloomberg's Eric Chapman has more on today's testimony before the Senate Banking Committee.
Powell said while interest rates impact consumer demand, supply shortages are a major contributor to current inflation.
We do think we'll get over the course of this year return to normal supply conditions, and that's going to affect our policy. If we see inflation persisting at high levels longer than expected, if we have to raise interest rates more over time, we will. High inflation is a severe threat to the achievement of maximum employment and to achieving a long expansion that can give us that.
Powell said he doesn't expect that currently rising wages will create long-term inflationary pressure. In Washington, Irv Chapman, Bloomberg Radio.
President Biden will use his speech in Georgia this afternoon to endorse changing Senate filibuster rules that have stalled voting rights legislation. He's expected to say it's time to choose democracy over autocracy. White House Press Secretary Jen Psaki.
The president knows that he was elected to do hard things and to advocate for hard things, even when there feels like there's an uphill battle or it's challenging to get that done.
Psaki says Republicans need to ask themselves if they are for protecting people's fundamental rights or not. She says Senate Minority Leader Mitch McConnell has voted for voting rights bills in the past. She wants to know what's changed. She also asked whether he wants to be part of perpetuating the big lie. The White House has announced $308 million in additional humanitarian assistance for Afghanistan. The new aid will be funneled through humanitarian organizations. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. So a couple stories we just want to bring to your attention. We talked just now with our TV team, Romaine, Caroline, and Taylor about Jay Powell today, of course, up on Capitol Hill. One of the things he said, in addition to talking about monetary policy and his role as head of the Federal Reserve, he did say the Fed will release its report on central bank digital currencies within weeks. He said that. So the Fed's digital currency report, ready to go.
How many weeks, Carol? We don't know, right? It just said weeks.
Details.
I know. Well,
just like on when they're going to start raise rates or roll off the balance sheet, right? Big macro, but those specifics, they weren't quite there.
4 weeks is 1 month, and 52 weeks is 12 months. So.
Darn you, Tim Stanovic. Details.
I'm always looking for those time frames. Hey, another story catching our eye when it comes to
Got
crypto.
some details on this one.
Yeah, it has to do with Kim Kardashian and Floyd Mayweather Jr. They've been sued by allegedly scamming four allegedly scamming investors in a cryptocurrency called Ethereum Max.
I'd love to see their contracts because they were paid to hype the blockchain-based digital tokens to their fans, quote, causing investors to purchase these, losing investments at inflated prices, according to the complaint filed in an LA federal court. Former Boston Celtic Paul Pierce also named as a defendant to the suit. This is what I want to see, the talent contracts. Like, what responsibility? It's probably none, right? I'm just a paid spokesman.
I have no idea how this stuff works.
I mean, I don't know. I'm just guessing.
I would imagine, though, that these celebrities would have a legal team go over this stuff that would make sure that they're sort of indemnified, right?
Well, what's interesting, Kardashian was called out back in September by a UK financial regulator for luring her 250 million Instagram followers into the, quote, crypto bubble with delusions of quick riches. I mean, these people are signed on because people look to them, follow them, and are like, well, if they say this, like, maybe I should do this.
Yeah, and that's why they're hired in a lot of cases to talk about products and post about products on social media. We should note that representatives for Kardashian and Mayweather did not immediately respond to requests for comment. Pierce couldn't be reached for comment, and earlier the January 7th suit was reported by the Wall Street Journal.
Yeah, I guess then the case was filed as a proposed class action on behalf of everyone who bought these tokens from mid-May to late June. Lots of details we still have to find out, so we'll follow this one. You're listening to Bloomberg Radio.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
Well, after a choppy start, the equity market is trading higher, and the S&P 500 at this point looks as though it could end a 5-day slide with the S&P showing a gain of about 0.8%. Let's get you to the Bloomberg Macro Squawk Desk. We'll check in on the latest price action with Bill Maloney. Hi, Bill.
And good afternoon, Doug. U.S. stocks in the green after some early weakness. Dow's currently up 177 points. S&P's gained 39, while the Nasdaq is now higher by 200. The U.S. 10-year yield at 1.74%. Gold is up 20. Bitcoin is trading higher by 3%. And among the main 11 S&P sectors, leaders were energy, tech, and consumer discretionary. Only real estate, staples, and utilities were in the red. Leaders to the upside in the Dow, Boeing and Salesforce, while IBM and Procter & Gamble led to the downside. And in other news, Powell said the Fed will likely allow a balance sheet runoff later in 2022. Sequoia Capital and Paradigm agreed to invest $1.15 billion in Citadel. And Goldman Sachs cut China's 2022 GDP forecast to 4.3% on COVID risks. Wrapping things up, Albertsons plunged as much as 11% after earnings. Live from the First Breaking News Desk, I'm Bill Maloney. Doug.
All right, Bill, and I want to point out, too, that we've got a rally in the crude oil market with WTI 81.45 now. We're up more than 4% in extended New York trading. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Bloomberg Business Week is brought to you by SEI. Visionary asset managers find opportunity where others are challenged. Exploit disruption's potential with SEI's global operating platform. Find out how at SEIC.com/IMS.
All right, Bitcoin boy, did you know it is down nearly, can I call you that?
Yeah, you can call me that.
It's down nearly 40% from its all-time high of about 68,000. I know it's up a little bit today, right?
It is up a little bit today. Yeah, the 68,000 number is one I've been thinking about a lot lately as we've seen this slide continue into
where was
the
I when it was
beginning
0.001 cent?
Yeah, you were not buying pizza with Bitcoin, okay?
No, but look how things have changed.
Yeah, they really have. 2022 is not off to a great start. And in fact, there's a technical indicator that we're watching closely right now, despite the fact that Bitcoin is up. It's called the Death Cross.
Dun, dun, dun.
And here to help us explain what exactly it is and why she's watching it so closely is Emily Grafeo, cross-asset reporter for Bloomberg News. She joins us on the phone from New York City. Emily, okay, first of all, explain to people who do not have technical backgrounds what a death cross is.
You have to do it in an ominous way, too. No, I'm just kidding.
Of course. Well, it is a very ominous sounding technical signal. So the death cross is basically when Bitcoin's 50-day moving average dips below that of its 200-day moving average. So it basically means that the coin is falling really quickly, and you can see that in the price.
So a trend like that, when you are crossing trend lines, like when you a shorter term crossing of that longer term, significant longer term trend line, what does it typically mean, or historically, does it mean that it's going to stay down, or this is something Bitcoin can be very volatile. So I'm just wondering, how do we read it? Technicians will read it one way, but fundamentally, how should we read it as well?
Yeah, so I mean, everyone's really watching this. I think one, because it has that really scary name, but also because in the past we've seen some large price declines in Bitcoin after it's made this so-called death cross. So in November 2019, we had a death cross, and then the coin traded lower. But actually, there's been other times when it's flashed this technical signal, and even the technical analysts have pointed this out. It's flashed the signal and then actually moved higher. So it's kind of unclear whether this is a bullish or a bearish signal. Matty Greenspan of Quantum Economics, he had a report about the death cross, and he basically said for Bitcoin, for all the previous death crosses that we've had, it's kind of been a good buying opportunity if you zoom out and look at Bitcoin.
Fake out.
Yeah, that's really interesting. It's interesting that you mentioned that, Emily, because Callie Cox, who is now at eToro, she was tweeting about this earlier. She sent a tweet that said, OMG, Bitcoin is approaching a death cross. And then she said, me, a data nerd, Bitcoin has gone through 8 death crosses since inception, but it hasn't died yet. But I still think there's this idea, Emily, that we do latch onto the technicals with Bitcoin because there really are no fundamentals for us to latch onto, right?
Yeah, I mean, it's definitely harder with Bitcoin, especially when it's such a new asset class. I mean, there's another signal that I look at and that a lot of my colleagues on the cross-asset team look at, and that's Bitcoin's correlation with the S&P 500. And so that basically measures if stocks are going up, is Bitcoin also going up? Are they trading together? And we've noticed that over the last year, that correlation has moved higher, which could mean that people are kind of viewing Bitcoin not really as a hedge or an alternative asset class, but really a speculative asset like they would view a stock.
Yeah, I mean, that is interesting. Like, I do think about some of the established technicals, right? They're all over the Bloomberg terminal. We use them for so many different asset classes, but you do wonder when it's something that, to some extent, even though cryptocurrencies, Bitcoin has been around now for a lot of years already, that do not the typical technicals, can we apply them in the same way? And do we need to kind of think about it differently?
Yeah, and then, I mean, even if you zoom out to the fundamental picture, a lot of strategists that I've spoken to who are kind of bullish about Bitcoin in the long term have even admitted lately the downtrend that we've seen in Bitcoin kind of has to do with the fact that it has been trading like a speculative asset, and we had this news from the Federal Reserve at the end of 2021 that they were going to be more hawkish. So now you're seeing all of these speculative assets like Bitcoin, like tech stocks, start to cool off.
So I wonder about what your sources are saying, what analysts you speak to, or what they're talking about with other technicals with Bitcoin, because another technical that we oftentimes hear about is actually like, levels, right? 40,000, 39,000 are levels that have been bandied about in recent days. And it indeed does seem like we have seen some sort of bounce off of lows in recent days. What are you hearing in terms of a lower level?
Yeah, you're right, Tim. Actually, the 40,000, that's a technical support level that Bloomberg Intelligence had. So it does seem like we dipped below 40,000. I think it was 2 days ago now. That was for the first time since September. But we bounced pretty nicely, and now we're up even higher at 42,000. In terms of levels, though, there was an interesting JP Morgan survey, and they surveyed their clients and asked where do you expect Bitcoin to be by the end of 2022? And 41% said 60,000. I mean, we already hit a record high of 69,000 in November. So if we ended this year at 60,000, that wouldn't be a very exciting year for Bitcoin gains.
Kind of a dun-dun-dun.
Dun-dun-dun. I feel like the skull emoji is the death cross. Like, whenever I hear death cross, I just feel like somebody sent me a text with the skull emoji in it.
So true. You look up in the sky, black clouds, and you'll see it as well. Thank you. Emily Grafeo, she is cross-asset reporter at Bloomberg News, joining us on the phone in New York City. Dun-dun-dun.
Skull emoji.
Exactly. This is Bloomberg.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
You are listening to Bloomberg Business Week. Hello there.
Hi. I was just playing around with some interest rate stuff on the terminal.
Warp function.
Yeah.
We're playing around with some stuff. Coming up, she's always all over the terminal and coming up with some really cool chart of the day.
That's why I was doing this, because her chart of the day is all about how many interest rate hikes in 2022.
So we'll talk to her about this.
Yeah, Kriti Gupta is who we're talking about. In the meantime, a check of what's going on.
Time will tell.
Under
Patience,
a half hour.
my son.
Patience. Okay, I just want to know everything, Carol. We are under a half hour away from the close of trading today. Doug Krisner, how's it looking?
Well, I think the equity market generally is more comfortable now with the Fed's hawkish pivot on inflation and what that in turn means for the path of interest rate hikes. At his confirmation hearing today, Fed Chair Jay Powell was saying the Fed will prevent rising inflation from becoming entrenched, and he said if the Fed has to raise rates more over time, it will. That said, Powell also said inflation will likely peak by the middle of this year. And we should also point out this growing chorus within the Fed in preparation of a possible rate hike in 2 months' time. Here is the head of the Cleveland Fed Bank, Loretta Mester.
If the economy in March looks like it does today and the outlook is similar, and of course there's uncertainty around that, but if it does, then I would support moving the funds rate up at that meeting and starting to move back from some of the extraordinary accommodation we needed earlier in the pandemic.
Now, in terms of data points tomorrow, importantly, we're going to get the number on retail inflation for December and numbers on real earnings. Now, these data points perhaps could initiate maybe a little bit of repricing in risk. For the moment, though, energy shares leading the S&P 500 to its first gain in 6 sessions. The S&P Energy Index higher by 3%. The S&P 500 is up 0.9% right now. Nasdaq comp rising 1.4%, and the Dow is ahead 0.5%. 10-year Treasury just under 175. We'll talk more about markets in 15 minutes. I'm Doug Krisner. That's your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Well, it is just under a half hour from the close of trading on this Tuesday afternoon. TikTok on January 11th. Hey, at this time each and every day, we like to bring in Kriti Gupta, Bloomberg Markets correspondent for Bloomberg News. She joins us on the phone from New York City. Today's chart of the day, Kriti, is all about rate hikes, a very appropriate one, given that we just heard testimony and questioning from and to Fed Chair Jerome Powell a little earlier in the day. Take us through pricing in number 4.
Yeah, absolutely. So a big question in the market, of course, is not just if the Federal Reserve is going to hike rates, but when they're going to hike rates. And if that means that they're going to hike sooner rather than later, does that mean we have more rate hikes to expect in 2022? So the dot plot, which is essentially the Federal Reserve's mechanism of kind of hiking in the rates, the best forecast that they can give us is very informal, is simply to shows us that there are 3 rate hikes.
Are you watching TV at home, Kriti?
I'm not. My squawk ran off.
All right.
I muted
you
it.
can tell us. We love you no matter what. So you can. Okay,
No.
Go ahead.
That is Vincent Signorella's voice, by the way.
Terminal function is SQUA go for those who are wondering how they can do it.
A little bit of a shameless plug. Yeah. I listen to them religiously. Anyway, so they would also tell you that there are the amount of rate hikes is really in focus right now. The dot plot tells us 3. The market tells us 4 now, and that's really what my chart of the day shows. It measures these really fancy things called euro-dollar contracts, which is the way bond traders kind of price in interest rate expectations and price in hedging against those interest rate expectations. And right now, they have about 100 basis points of hikes kind of baked into the market, which tells you that they're actually expecting a 4th rate hike in 2022. Compare that to what Goldman Sachs, JP Morgan, Deutsche Bank has said, which they're also agreeing to 4. Jamie Dimon, of course, saying, well, 4 is not even enough. The economy can easily absorb 4. We need more than that.
Says the bank dude who benefits by higher rates.
That is true. That is true.
You know, if anything I got from Jay Powell, and I think for a long time, and he and his team at the Fed were accumulating lots of information to try to figure out what was going on in the economy. I'm going to say it, I'm a broken record. We've never lived through an instance where the economy shut down and then bounced back as quickly as it did. So, you know, what does this mean longer term in terms of what we need to do to make sure the economy keeps going but doesn't overheat even more? this, once things kind of settle down post-COVID. I mean, it's tricky. What I got from Jay Powell, Creedy, is that he's just going to watch what's going on and then react. So if he has to be more aggressive, they will. And they've got certain tools to do that, not just rates, right? But they can deal with the balance sheet. If things start to slow down, they can pause a bit. And that's, to me, kind of the big takeaway here, even though the markets might say, or there might be some debate about what happens next.
Yeah, and I think you're 100% right on that. But I think what Chairman Powell has also said in the past, and this holds very true, is that interest rate expectations, what the market is expecting, often has consequences for the real economy. And that's something that's really why the Fed is so careful about the language that they use in coming out what they said. So if you are pricing in, say, 5 interest rate hikes, as perhaps Jamie Dimon would love to see, that's actually going to have real impacts on people's mortgages, on people's car loans, on college loans, student debt, anything like that, as opposed to just waiting for the Fed to hike those rates. So that's why this is so crucial, not just to what's going on for a bond trader, but what's going on for the real economy.
Could ease supply chain problems, right? If you're spending more, dealing with your mortgage and some other things, you might not be out there buying so much stuff.
And speaking of that, it might also ease housing price increases too. If that mortgage amount that you have to pay each month goes up.
Right, which is why the Fed's got to watch, right, Creedy? So many statistics to determine, okay, what do we do, and how do we do it?
Yeah, it really is a juggling act. And right now, I mean, and this is what you're going to hear from the Fed. You also heard it from Jamie Dimon. They both agreed the economy is doing great. They are rocking, they are rolling. But the issue is it heating up too quickly? And when is too hot? Or when is super hot too hot? That's going to be
Goldilocks in a suit. Goldilocks in a suit. I'm just going to put that comment out from. I didn't say it. We had Steve Sosnick who actually said it. It's in a story here on the Bloomberg.
A good guess.
I love that one.
Yeah,
hey,
great. I love it.
Creedy, a story that caught your eye earlier in the day today is also one that caught my eye. It's all about United, and we got some numbers from United's CEO. In a memo to workers, giving us an idea of just how COVID is affecting its workforce.
Yeah, the magic number, about 3,000 of its workers currently positive for COVID-19. That's according to the United CEO. And they actually said that this is not an uncommon problem. Multiple U.S. carriers have, of course, been hit by this. But what it is affecting is their bottom line, and specifically their flight schedule. So for the next couple of weeks, as they kind of deal with this labor shortage, essentially, think about all the people that are calling in sick. They have to kind of pare back that flight schedule. And that's going to be a really crucial point in light of the fact that not just United, but airlines broadly are also dealing with pilot unions, flight attendant unions, CDC kind of mandates, the Biden vaccination mandate. So there's a lot going on when we're talking about labor shortages broadly and really accelerated now by COVID cases.
3,000 is a big number here, given that United has 85,300 workers as of September 30th, 2021. So that's a big number.
It is a big number. And think about the fact that, sorry, I didn't mean to interrupt you, Carol.
No.
Think about the fact that airlines in particular are not an industry that relies on, say, freelance work. Amazon, for example, relies on freelance work. Walmart relies on part-time work. Airlines, you can't really do that. So
Got it.
All the more impact.
Shares of United Airlines up almost 1%. Creedy, thank you so much.
Let's get to world and national news. Nancy Lyons standing by in D.C. with the latest. Hey, Nance.
Thanks, Tim. Voting rights legislation is the topic of President Biden's speech this afternoon in Georgia. He'll make the case for a bill to prevent states from curbing voting access and will push for a one-time change in the Senate filibuster rules in order to clear the way for the bills. But Senator Joe Manchin, a Democrat from West Virginia, is against that option. Instead, he's working on a bipartisan voting rights bill.
We're working on that. That's a bipartisan group. We're working on that. Some good stuff.
Manchin says any changes to the chamber's rules, including the filibuster, should be made with support from at least 2/3 of the Senate. The U.S. reported a single-day record of 1.5 million COVID-19 cases yesterday, and it is putting a strain on the nation's hospitals. The nation's top infectious disease expert, Dr. Anthony Fauci, says vaccines are still the best tool to fight the virus. Also, during an update with senators today, Fauci accused Senator Rand Paul of using the pandemic for his own political gain and encouraging politically based attacks on Fauci.
That kindles the crazies out there, and I have threats upon my life, harassment of my family and my children with obscene phone calls, because people are lying about me.
Fauci has sparred with Paul in the past after the senator accused Fauci of not believing scientists who say that coronavirus emerged from a lab in China. Well, following a confirmation hearing for Fed Chair Jay Powell today in the Senate, Senate Banking Chair Sherrod Brown says Powell should easily win a second term. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
All right, Nance, thank you so much. Carol Masser along with Tim Stenovec, just watching the markets here, folks. We've got about 19 minutes to go, and we're pretty much hovering near our highs of the session. So we've got a rally. Really, the outperformer is certainly those tech names, Tim.
Should we talk cybersecurity a little bit?
Sure. We haven't really, we've done a little bit this year.
We haven't done much this year, but one thing that you talked about at the end of last year a lot, Carol, was the idea of the vulnerabilities within our system. We learned that last year in terms of hacking when it came to Colonial Pipeline and then the meat processing plant as well being taken under attack in terms of ransomware. There's some researchers have found that hackers can actually cut the lights with rogue code. Cut electricity distribution worldwide. It could be hacked into to turn off power. That's according to some cybersecurity experts.
Well, and this is, I think about this and how much increasingly all of us are doing on our phone. The variety of apps and apps that are, impacting our homes in terms of lights and security and all these different things. And you do wonder, I don't know, it does put me a little bit on edge, except we all continue to dive in big time. Do you use your phone for a lot of
everything,
like lights and?
Oh no, I don't. We have a Nest thermos. I mean, maybe I shouldn't even say this on here, but you can hack.
Tim does not have a Nest.
Yeah, don't have a Nest. We have one Nest thermostat in our apartment. But I think that's kind of the extent of our connected stuff. We actually chose not to have a personal assistant in the house, like one of those.
Yeah.
Like Amazon makes them, the Echo.
Siri or not Siri? No, I mean Alexa or
Alexa,
Google Home.
Apologies to everyone who's systems we just turned on.
Well, and think about big places, like whether it's a stadium or a bank or, I don't know, transportation.
Yeah, I think one question I like to ask cybersecurity experts whenever we talk to them, even if we're just talking about their businesses, is what are your best practices as somebody who lives in this world? Because these vulnerabilities are oftentimes found using, things that humans are susceptible to, right? Phishing, and the idea that the weakest link in a system is a person who clicks a link that they're not supposed to.
Well, and this is specifically about a company, Red Balloon Security, and they unleashed a few lines of malicious code that knocked out a computer designed to protect electrical lines, just doing kind of a test to show what can be done. It's scary. This is Bloomberg.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We have less than 13 minutes until the closing bell. The equity market today seems to be feeling less threatened by this idea that the Fed has made a hawkish pivot on inflation and what that may mean for the path of interest rate hikes going forward. At his confirmation hearing today, Fed Chair Jay Powell was saying the Fed will prevent higher inflation from becoming entrenched, and he said if the Fed has to raise rates more over time, it will. That said, interestingly, Powell also said inflation will likely peak by the middle of this year. And at the same time, while all of this is going on Capitol Hill in front of the Senate Banking Committee, we have a growing chorus of Fed officials preparing for the market of a possible increase in rates at the March meeting. Tomorrow, we're going to get the data on consumer inflation for December, along with the numbers on real earnings. For the moment, Dow Industrial Average higher by 0.5%, the S&P 500 better by 0.6%, being led higher by the energy complex. WTI crude oil above 81 the barrel, and we have the S&P 500 energy index higher by 3.2%. One negative within the area of technology, Seagate Technology is down today after Wedbush raised concern about the company's valuation. But many of the semiconductor stocks are simply on fire, with the Philadelphia Semiconductor Index up about 2%. In the bond market, 10-year Treasury yielding 1.74%. I'm Doug Krisner. That is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. It's 3:49 on Wall Street.
The following is an editorial from Bloomberg Opinion.
Less than a year after canceling Donald Trump's Remain in Mexico policy for migrants attempting to enter the U.S., the Biden administration has started enforcing it again, all too reluctantly. Some background. In August, a federal judge found that Biden had improperly rescinded the policy and ordered it reinstated, a ruling upheld by the Supreme Court. The White House has done so, but it insists that it is not acting eagerly and has asked the High Court to revisit its ruling. The administration would be better off working to make the program more efficient and humane. Biden's rush to undo his predecessor's policies has undermined public support for the comprehensive immigration reforms the U.S. needs. Strengthening this policy, rather than discarding it, would be the best way to restore confidence in the government's ability to administer a fair and orderly system. This editorial was written by the Bloomberg Opinion editorial board. I'm David Shipley. For more Bloomberg Opinion, please go to Bloomberg.com/opinion or OPI and go on the Bloomberg terminal.
This has been Bloomberg Opinion.
I'm driving in my car.
Yeah, but you let me drive.
Oh, no. Who's gonna drive you home? Honey, please, I'll do the driving. Drive on. Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, we've got 10.5 minutes left in the trading day. And folks, we're just coming off our best levels of the session, as we've been talking about, Doug Krisner, up really on the Nasdaq, up about 1.2%. So the outperformance there. Let's get to it. Doug Sioka is back, CEO and partner at Kavar Capital Partners, over $1 billion in assets. And he's on the phone from Leawood, Kansas. Doug Sioka, happy New Year. How are you?
I am fantastic. Happy New Year to you and Tim as well.
It's really great to have you here. So help me make sense of these first, 5, 6, 7 days of 2022.
Yeah, it's been interesting, right? Fast and furious right out of the gate. And, it's an incredible amount of price dislocation very early. And, we've come to taking, and maybe this may be more of a Midwestern perspective, of this being the anti-Ted Lasso effect on all.
I like this.
I don't know if you guys are Ted Lasso fans.
Oh, yeah.
Yes.
We've both seen both seasons.
Yes.
Oh, great. So there's a scene in the first season, and Ted is playing darts, and he suggests to his opponent that he should be curious and not judgmental, right? And that is exactly the opposite of what the market tends to do, right? It's always been a collection of investors who are kind of fire-ready aim. And I think that's the worst approach for this market, right? If you're a curious investor, you might ask, what was the best performing industry sector the last tightening cycle?
Right.
If you're a curious investor, you might say, what were the best performing asset classes during the last liquidity extraction? But a judgmental investor, right? A judgmental investor is making this impatient determination that a great unwind must be forthcoming because we are transitioning away from easy money environment, and we just don't think the Fed is going to be so disruptive to corporate prosperity as to warrant some bleak prognostication, particularly when we anticipate earnings to indicate otherwise.
Well, hence, I'm going back to a great comment by Steve Sosnick. Am I saying it right? I think so. I hope so. Steve, let me know if I'm not. But Steve, a comment by him is in one of our Bloomberg write-throughs, and he calls Jay Powell Goldilocks in a suit. And it does feel like, Doug, like I get it. Like it does feel like even though watching the financial markets is not part of the Fed's mandate, that Jay Powell's not going to want to do anything that is too disruptive in terms of the financial markets, because that impacts a lot of things, certainly in our world. So he's watching a lot of stuff, if you will, in terms of the moves that they're going to make.
Oh, I don't think there's any question. I think that's a very good way to characterize it. And if you look at just today's trading action, right, with Powell in center stage, and everyone is tuned into what he's saying for two reasons, I think, right? One, was he even more hawkish than he had been in the release of the last meeting's minutes, which came out last Wednesday, which kind of triggered this 30 basis point back up in the 10-year. Number two, did he say anything that was going to imperil his prospects of being reconfirmed? And I think the answer to both of those is no, right? So I think we're seeing a little reversal today, or maybe a relief rally from what has led so far this year. But it is interesting, right? Because can you guys give me an example of when any Fed has exhibited proactivity or successfully issued a preemptive strike? Because I can't, right? And by virtue of the fact that they call themselves data-driven, it almost takes it off the table. Yet for some reason, investors expect them to be proactive. But I think the very best we can hope for is a soft landing, and Goldilocks would engineer something that, I guess, the best prospects of engineering something along those lines.
Okay.
Could happen.
So take us to your themes of 2022 and help us understand how you can put these theories into practice when it comes to asset allocation and what you're bullish on for the year.
Yeah, thank you. So Tim, we have three themes, right? We really feel like there's going to be an international monetary policy non-conformity, right? Their recovery speeds are alternating around the globe, right? So there are going to be different policy postures predicated on where we are in the cycle of economic recovery coming out of the global pandemic. So there are going to be some direct organic investments into certain countries, and also some what we're calling inorganic or currency-motivated moves to be made in others. So that's our first theme, is international monetary policy non-conformity. Second theme is finally some mean reversion in catching up in international stocks and value stocks. Like, could this be the year where they have their quote-unquote day in the sun, right? And it's been over a decade since international investments had outperformed domestic counterparts, and almost as long for value stocks. But we do feel like the expected returns may finally be at levels that are going to be conducive to elevated portfolio weights in this area. Because if you think about the Fed in a tightening posture, there's likely to be little to no multiple expansion. So in our individual stock portfolios, we think you need to favor better than average earnings growers, and that would thereby impute an absence of high debt levels, those companies that paid dividends, and those also that have a moat of competitive protection, very wide and deep, to pass along higher input prices to their customers.
Right.
That kind of is a characterization of a value stock.
Hey, Doug, let me ask you, though, about some of those big technology names. And, like, you just hear so many people kind of, okay, they've had their day in the sun. Having said that, a lot of these names have great visibility, and they have deep pockets, if you look at their balance sheet, and are able to weather, a lot. What are your thoughts on some of the FANG names that are out there?
Yeah, I think so. I would kind of differentiate the FANG names from some of those companies, Carol, that were the poster children for kind of the speculative excess going into the latter part of an easy money cycle, right? And we're seeing a lot of re-rating in some of those names right now in some of those categories. So be they meme stocks, crypto stocks, SPAC stocks, right? These are companies that didn't have that type of visibility. Right. And I do think if this is a thing, there is also some window undressing that's taking place where portfolio managers that were chasing benchmarks that bought names into the portfolio that they may not be intent on keeping because they performed so well over the last 3 to 5 years.
Right.
So we're probably seeing a little bit of rotation cyclically out of some of tech in general into some value areas, but ultimately I think there'll be a re-engagement of the FANG stocks because of their high and strong visible corporate growth.
All right, Doug, really, just quickly, I want to make sure I've got it right. Anti-Ted Lasso effect. So in other words, we should be curious and not judgmental. Just 10 seconds, right? We should be
curious and not judgmental. Yeah, I mean, if you think about the last tightening cycle, the Fed raised rates 9 times, undertook a balance sheet reduction, and the 10-year went from 2.4 to 3.2. Leading sector in the S&P, tech.
I know.
All sectors were higher.
Yeah, right?
We talked. Large growth was best, but there was a pretty tight correlated ascendancy back then, and who knows if that's going to happen this time, but I think we need to be curious to your point and not judgmental.
I love it. You sometimes said that I'm a calming voice when it comes to things that are crazy, and you've been a calming voice in an environment that has really raised a lot of questions, so love you for that. Be well. Doug Sioka, CEO and partner at Kavar Capital Partners, joining us on the phone from Leawood, Kansas. Coming up next, we'll be joined by our Bloomberg TV team for Beyond the Bell, live on Bloomberg Radio, Bloomberg TV, and YouTube. We're counting you down to the close.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic, Caroline Hyde, Taylor Riggs counting you down to the closing bell, here to help take us beyond the bell. Our global simulcast with Carol Massar and Tim Stenovic bringing together our Bloomberg television, radio, and YouTube audiences. And Carol, this is a day, of course, a lot of people have their eyes on the market. A lot of people have their eyes on Powell, and some people, I'm told, Carol, are pointing to a 19th century British fairy tale to describe what they heard out of Jay Powell today.
I didn't know that was the history of Goldilocks, 19th century.
Do you know the original Goldilocks was actually very morbid? You know, they all died in the end or something?
Is it
we like writing fairy tales like that. They're always dark.
It's a lot of fairy tales, right? Like they become these sweet children's stories, but they're kind of creepy, right?
They've been revised to make them a little more genteel. Well, and did you know that the original 3 bears were bachelors? They weren't like a mama and papa, and then somebody decided that maybe,
It sounds like you went down a rabbit hole, Romaine. Speaking of revisions, it certainly feels like a revised thinking with trading because, man, we are all risking, Tim.
Yeah, we certainly are. I just want to remind people, though, even though with the climb on the Nasdaq that we're seeing today, we're still in the hole more than 3% year to date.
I mean, at the moment, though, I said it a moment ago, volume's a little bit thinner than we're used to, so maybe more conviction behind the selling that we've seen in the last few days than we're seeing in the buying. But nevertheless, S&P 500 up 0.9%. You've got to thank commodities in large part, though.
You think commodities, you think some of the dip buyers coming back into the bond market as well, because you're looking at now some of the highest yields that we've had going back since pre-pandemic, at least on the front end of the curve. And so you're really starting to see some buyers come in, only 1 or 2 basis points, but it is a reprieve from the weaknesses of late.
The interesting thing about commodities, though, that the big boom we're seeing in prices is much more supply-driven, not necessarily demand-driven, and you wonder what the read-through is to the economy, with maybe the exception of natural gas. It's like, 3 degrees outside, and
we're all cranking up our heating.
It's cold.
Yeah, I know. Carol's got on a turtleneck. We're all prepared here. Dow Jones Industrial Average, the closing bells here. It's going to finish the day higher here, up by about 181 points, or 0.5%. The S&P 500 higher by about 43 points, or 0.9%. The Russell 2000 having a pretty good day here. We talk about whether that rebound in cyclicals, whether that could actually sustain itself. It's higher by about 1% here right now, but the outperformer on the day belongs to the 2 Nasdaq indices, both the composite and the 100, going to finish the day roughly up by about 1.4%. A lot of those big cap tech names are doing their best here to pull this market higher, Carol.
Yeah, pretty cold outside, but pretty hot in terms of a lot of sectors. The SOX is up about 1.7%, Taylor, and then you've got the Nasdaq Golden Dragon Index. Talk about a rally up about 4.5%. Still down a lot from its highs, but nonetheless moving up today.
And I really love that you talk about technology, Carol, because those are some of the biggest gainers that we're seeing on a sector level as well. Come and take a look at this. It's media, entertainment, hardware and equipment, technology hardware, semiconductors. Those sectors are all up as much as 1.5%. Of course, the big gainer continues to be energy. As Romaine was saying, is this a supply story or is this good demand and a good read-through on the economy? Energy up again, 3.4% on the day. There are a few losers, Carol, so I'll take you through these quickly. Some of this really is a bond story. Is it food and staples? Is it real estate? Is it utilities? Those are off about 1% or so. A little bit as bonds, though, they are stable. It has been a yield higher story in the last week or two.
All right, let's get to some of the gainers, the specific names on the move in today's session. Check out Illumina, top in the S&P 500 and Nasdaq, up almost 17% in today's session. We got more news from the JP Morgan Healthcare Conference. The company revising its fiscal year 2021 sales, said that analysts for 2022, those revenue forecasts were too low. Yet an upgrade by Barclays, so everybody all in on Illumina today. Shake Shack. Tim's going to actually, he's been thinking about having a Shake Shack burger.
Yeah, I'll take a chicken shack right now.
Up
He
about.
doesn't eat anything. Have you seen that jawline? He wouldn't never.
He's doing pull-ups around the office. All right, Shake Shack up 13% in today's session. Company coming out. Preliminary fourth quarter results topping expectation. They had a lot of upbeat things to say about the business. And this is despite being some shortages of workers, nonetheless, being pretty upbeat. And I just want to mention Peloton, up another 6.4%, still down about 80% from its high, but nonetheless, some investors, Tim, piling in.
Hey, you mentioned that shortage of workers for Shake Shack. I'm talking a little bit about inflation and higher prices, partly due to rising wages. Let's look at Albertsons. Shares down the most in about a month, more than 9.7% on the day. Higher labor and logistics costs, that made it more difficult for them to cash in on rising revenue, wage increases and hiring, pushing up employee expenses. An interesting story with Domino's. We heard from Domino's CEO Rich Allison earlier in the day today. He spoke at the virtual ICR conference. Shares falling after he said that Domino's sees between 8 and 10% food cost increases this year versus 2021. Certainly that will take a hit to margins, or they're going to have to raise prices as a result.
I'm hungry.
Yeah, we're doing a real food theme today, by the way. Also taking a look at Aptiv, finishing the day lower by a little more than 3.2%. The vehicle component manufacturer is acquiring the software provider Wind River for $4.3 billion. This is an attempt to gain an edge in the intelligent vehicle application space. Aptiv finished the day down more than 3.2%, Caroline.
Meanwhile, I wish I had my commodity sphere over here, chocolate prices. I was just reading a story, if we're going on the food theme, that chocolate prices, cocoa prices are rising up about 5%. The demand we're all really eating into our chocolate at the moment amid COVID. But instead, I bring you, well, once again, milk on the higher side. Make of that what you will. But really, commodities, strength here. That's on the back of a weaker dollar, but also, well, Fed Chair Powell maybe outlining a slightly less hawkish tilt than the market had braced itself for today. WTI crude up 4%. Actually, $81 is where we're at. So breaking that high, we haven't seen these sorts of levels since November the 11th. Brent crude up 3.5%. Yes, we're getting movement in the gas prices. It's very cold here in the US, and we see people crank up their heat. But in Europe, actually, gas prices pull back down again. Zinc up 2 percentage points. We're seeing a bid for some of those metals. Goldman Sachs seeing bullish calls for the likes of copper. I'm looking also, though, at what is a sea of green in foreign exchange because the dollar is weaker. So we're seeing, in particular, Canadian dollar do well out of oil's moves higher. It's up 0.8%. Norwegian krone as well, very commodity-related currency there, up more than a percentage point. Basically, everything is higher against the US dollar as we see that weakness as yields tick down that little bit. And I'm looking at actually yields that were up in most of the world. Taylor, pre the Federal Reserve, we saw Spanish yields just up about 3 basis points, even Japanese yields up a little bit, but not so in the US.
You know, really interesting point, Caroline, that on the long end here, at least on the 10s and 30s, yields are coming down now for a second straight day, but you note that it's still really at the higher end of the range that we've been at as of late at a 174 and a 207 out on the long end. Those are sort of the higher levels that we've seen. Carol, I'll pull our attention here to the front end of the curve. It's stable, at least on the twos, but at 90 basis points. I mean, a year ago, we were at 10. So if you're thinking about an 80 basis point move in the last year and the moves, even though it has been stable today, what we've pulled through, what we've gleaned from Jay Powell's comments here, and even other Fed governors coming out and saying, yes, we've penciled in 3-4 rate hikes this year.
Yeah, you know, it's interesting, and I'm watching that, as I know you are too, Taylor, in terms of where the Treasury curve and the Treasury market in particular kind of settles down. Is this it for a while? And I guess we'll have to see with this trade too on the equity side of things, Romaine.
Yeah.
Is this it? Is this kind of the new tone, the new trend line, or do we continue to just see a lot of moves up and down depending on the data point?
Yeah, and I think what kind of got lost too is, I mean, Powell made it clear during the hearing that fighting inflation is a priority. We also heard an interview that Mike McKee had with Loretta Mester, similar comments, and then some commentary by Raphael Bostic. So all of the members, and not just them, but the ones that we've heard over the past week or so, have really made it clear that this is the priority heading into that meeting at the end of January. And of course, what a lot of people think is going to be a live meeting in March with regards to actual policy tightening here. The question, I guess, is, how aggressive do they need to be? And are they willing to hit pause if they do see economic conditions change or financial market conditions change?
And maybe if they see inflation peaking mid-2022, they don't have to be that aggressive throughout the rest of the year. And also trying to walk that fine line of, to actually get maximum employment, you need to have curtail this high inflation that we see, pose many a question towards them of how you are going to have this inclusive labor market at the same time as tackling the price pressures that we see.
That was a really good point, because inflation really has been front and center. And it seemed like today, Tim, he was able to tie it together, that you can't have full employment with inflation with a 7 handle, of which we might start to see tomorrow morning.
Yeah, I did find it notable that the chairman of the Federal Reserve earlier in the day made sure not to say that he would prioritize one of the dual mandates ahead of the other. Both were equally important to him. I do wonder, though, guys, we're getting a read on inflation tomorrow. We're going to start hearing from more and more companies about rising prices, and to what extent we hear about inflation and rising prices, and as a result, higher prices that consumers are paying and higher wages that companies are paying when we start to hear from companies reporting earnings, and to what extent that actually has an effect on the way the Fed is thinking.
But interesting to hear Shake Shack talk about that and just say, listen, we've needed some workers, right, Romaine? And yet, nonetheless, they're up in their estimates.
And it brings up an issue too. I mean, when we get that CPI data, we also going to get a look at those sort of real average weekly and hourly earnings, which of course we know last month was negative, had a negative sign in front of it. So all these people getting these great bumps in wages and in their salaries, they're seeing a lot of that eaten away by the higher cost of living.
Yeah, and Jay Powell also mentioning that a lot of the wage increases were at the lower end of the job scale. So we'll see how that all plays out. Don't forget, we're going to get the Beige Book tomorrow as well. All right, that's a wrap. That's our cross-platform coverage beyond the bell on Bloomberg Radio, on Bloomberg TV, and on YouTube. We'll catch you again, same time. A lot of economic news coming your way. We'll catch you same time, same place tomorrow.
You're listening to Bloomberg Business Week with Carol Massar and Bloomberg Quick Takes Tim Stenovic on Bloomberg Radio.
I didn't know that there were 3 bachelor bears.
I didn't either.
Bears. I can never say bears. Bears.
Hey, Romaine made a really interesting point about higher wages that people are seeing, eating, and that getting eaten into with higher cost of living. And it made me think, isn't that kind of the point of inflation, though? Is that it sort of costs relatively stay the same. So if your costs go up, then your salary goes up commensurate with those costs.
Right, unless it starts chasing one another, and then we get into concerns about that. I mean, I don't know. I've got to think about, pull out my textbooks about like the balance of that, right? Like you would think, raise wages, raise prices, but do we see that spiral in this? That when we get
Don't say wage price spiral. That's not something that people want to hear.
3 bachelor bears.
Okay, that's better.
Goldilocks, that's the origins. Who knew? All right, let's get back to world and national news. Over to Nancy Lyons in D.C. Hey, Nance.
Thanks, Carol. Federal health officials are defending their response to the pandemic today, telling senators the science now supports keeping kids in schools despite the surge in cases. CDC Director Rochelle Walensky says improvements are now in place.
Today, what do we have for our children? We have vaccines, of course, that we can use. We have school testing programs. We have new science that demonstrates test to stay. This is where a child might be exposed in the classroom, but if they're exposed, they don't have to stay home in quarantine. They can test every other day or twice a week and stay in the classroom safely.
Walensky did say the Omicron variant continues to surge, now making up 98% of coronavirus cases, but she says the infections are less severe among those who've been vaccinated. The Justice Department is redoubling its effort to go after homegrown extremism.
The agency is creating a new specialized unit focused on domestic terrorism. Assistant Attorney General Matthew Olson announced the new unit at a Senate Judiciary Committee hearing today, marking about a year since the January 6th riot at the U.S. Capitol. Olson says FBI investigations of suspected domestic violent extremists have more than doubled since the spring of 2020. The Justice Department already has a counterterrorism section that Olson heads up. He says this new unit will augment the existing approach. In Washington, I'm Nathan Hager, Bloomberg Radio.
A Florida judge is refusing to further delay next month's jury selection in the sentencing phase of convicted Marjory Stoneman Douglas High School shooter Nicholas Cruz. Both the defense and prosecution had agreed to further push back the proceedings due to the coronavirus, but the judge says jury selection will be done with social distancing. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries.
All right, Nance, thank you so much. Carol Massar, along with Tim Stenovic in our Interactive Brokers studio. So my governor, New Jersey Governor Phil Murphy, today reinstating a public health emergency to respond to the Omicron-fueled surge in COVID cases. I feel like we're headlines that we're dealing with in 2020 pretty regularly.
Yeah, oftentimes, though, we should keep in mind that these states of emergencies have to do with the release of funds, and particularly this one has to do less with that and more about rules allowing executive orders. So the executive order allows for existing orders measures like requiring masks in schools and daycare settings to remain in effect. It also restates the existing state emergency across New Jersey's 21 counties, allowing agencies and departments to draw on state resources for COVID-related matters like vaccine distribution and testing, so allowing access to those funds.
Okay, and this health emergency declaration, effective immediately, will expire after 30 days unless renewed. Here's a quote from the New Jersey governor. He put it out in a statement. While we hope to return to a state of normalcy as soon as possible, the step I am taking today is a common sense measure that will protect the safety and well-being of all New Jersey residents while allowing state government to respond to the continuing threat that COVID-19 poses to our daily lives. As you mentioned, it kind of sets in place, right, in terms of being able to access aid and different things, right?
Yeah, it does. And you know what's interesting is that this happened now, and I don't know the details of why this happened now versus 3 or 4 weeks ago when we started to see this surge in new cases, or 2 or 3 weeks ago, I guess, because Governor Kathy Hochul in neighboring New York State today saying that it appears that cases are plateauing.
Well, it's funny, and he says it does not mean any new universal mandates or passports. It does not mean lockdowns. It does not mean any business restrictions or gathering limits. It does not mean going backward from any of the progress we've made together over the past 22 months. However, to me, it's like, well, maybe.
He was narrowly reelected.
Yeah.
And COVID restrictions are getting tiring to a lot of people as we enter year 3 of the pandemic.
Yeah, and I know people who said, oh, yeah, we went to a restaurant just across from Lower Manhattan because people didn't need to show their vaccine cards and so on and so forth to go into restaurants. Where in New York, it's like, you want to come in? Show your card. All right, you're listening to Bloomberg Business Week. Carol Master, Tim Stanovic. This is Bloomberg.
events, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Tape. This is a Bloomberg Business Flash.
The equity market advanced today after Fed Chair Jay Powell said the Fed will not hesitate to act if needed to contain inflationary pressures. And at the same time, a number of Fed officials were preparing the market for what seems to be the possibility of a quarter-point move at the March meeting. So we had in the broader market the S&P 500 halting a 5-day rout. We were up 0.9%. Energy, the leadership here. Energy shares tracking the price of crude oil higher. WTI in New York back above 81 the barrel. Here in the electronic session, 81.50. The gain is greater than 4%. For the Dow Industrial Average, we were up 0.5% today. And in the Nasdaq market, the composite index was up about 1.4%. We saw shares in Amazon rise today by nearly 2.5%. Morgan Stanley was touting the stock today, saying it sees an acceleration for Amazon's North American retail business this year. In the minus column, I think you have to include Seagate Technology. The stock fell after Wedbush raised concern about the company's valuation. Seagate right now in the regular session was off by about 2.3% in terms of multiple. Kind of interesting because on an estimated earnings basis, this only trades at 12.5 times earnings. In the bond market, 10-year Treasury last quoted in New York at a yield of 1.74%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
All right, Dougie, thank you so much. Well, this story caught our attention. It's about California, Tim's home state, which is the world's 5th largest economy. And I think it's safe to say, Tim, a state that we often turn to for trends and progressive policies that often become the norm.
Yeah, it certainly makes sense given the size of California's economy, among the largest, not just in the United States,
Huge,
but of
right?
course in the world. Chris Palmieri is entertainment editor at Bloomberg News. He joins us on the phone from LA. He, along with some other colleagues of ours, wrote a story about California's governor, Gavin Newsom, and the existential threats in the new spending plan. Those include homelessness, crime, and climate change that are top priorities for the governor. Chris, how are you?
Pretty good, thanks.
Hey, thanks so much for joining us on this. First, give us a layout of California's budget right now. I think a lot of people would be surprised to find that California has a budget surplus of to the tune of nearly $50 billion.
Yeah, it's a staggering amount of money. We're a state that's heavily dependent on income tax, and we've got a lot of wealthy people who are making a lot of money. So the numbers are, the cash is just pouring in. So much so that there's a state rule that says they have to distribute it back. So we'll be getting rebates. Last year was something like $12 billion in rebates, and the governor said there'll be more going out to taxpayers again this year. But that still leaves giving them $20 billion or so to play with, and we're seeing a budget extending a lot of the big grants that were given out last year to these big issues, homelessness and that. Newsom is facing a re-election. He just fought off a recall last year, but now in November he'll go for a second term, and so he's hitting all these buttons that he knows people are concerned about: crime, the wealth divide, and obviously COVID.
And I find it an interesting stat in your story, Chris. You say California's population declined for the first time in history in 2020. I mean, California's a gorgeous state. This is one of the states that you always hear people are like, yeah, I want to go live in California. And then they do.
It's because it's a great place, Carol.
It's a great, Southern California.
I
know. Well, you grew up there.
I did. I mean, I'm totally homesick, even reading a story like this, Chris.
So what's going on? Yeah.
Yeah, that's the paradox that we try to address here is that we are losing big companies, Hewlett Packard, Tesla. We are experiencing these huge problems, including the homeless encampments, 160,000 people homeless in the state, and yet there is also this wealth. So that's the bridge that Newsom and other politicians are trying to cross here and sort of figure out some way to redistribute the funds in a way that's actually effective, and that's the big challenge. It's so difficult to make some of these changes permanent.
Tim, I'm going to ask you a question.
Yeah.
I mean, you grew there, you grew up there, you've got family still back there.
Oh, yeah.
So how do they see California? Do they still love it as much as they did? Or, I think about fires, climate change, there's a lot of stuff going on.
They do. They still love it, but they also realize that because, none of my siblings live in the immediate vicinity of them. I have a brother in LA, I grew up on the Central Coast, that there's nothing tying them to the Central Coast right now. At the same time, we live on a well, and we've struggled with droughts and water running out. I mean, there's a good portion of my childhood. We had to take really short showers and, we're allowed to play with water guns growing up, which is I think to a lot of people might sound really surprising. But Chris, I mean, this is something that Californians deal with, day in and day out. I know it's different in LA, but, people are on municipal water versus on wells. But the drought problem is a huge one that has been present my whole life.
Yeah, well, we took a drive over the holidays to visit family in Northern California and up along the Central Valley there. I mean, sign after sign, the farmers just really blasting Newsom and, why don't we have dams and that kind of thing. So, and that in a nutshell is the fight. So you have the environmentalists who are saying, farmers should conserve water, you've got to take care of the wildlife. And the farmers saying we need more reservoirs. And in fact, the voters 7-8 years ago passed a $7.5 billion water bond, specifically to build new reservoirs, and nothing's happened yet. So those are the kind of frustrations that people see in the government and whether this money is being spent.
What about the cost of living? I mean, it's expensive. It's gorgeous, no doubt about it. But I mean, is that going to change anytime soon? What can the governor do about that?
He's proposed some of this, issues about the wealth divide. For example, there'll be more tax credits for low-income workers. There's extending pre-K and child care for families. Also, a fairly big thing, it would be the first to extending essentially Medicaid for undocumented people. So they would, poor folks, all poor people in LA, regardless of their immigration status, would have, or in California, would have health care benefits. They would be the first state to do that. So those are the kind of things he's doing.
Hey, Chris, just in the last 30 seconds that we have with you, what's the political goodwill that the governor has? He survived a recall attempt a few months ago. Well, what is the power that he has?
I think he's surprisingly still popular, given all the issues we're talking about. But part of that is because his antenna is so good. And, for example, part of this is he's got this new smash and grab unit, which is going, to fight those, mass robberies in stores. And so, he knows exactly, what button to push.
Right. Well, and I say amazing just because I think about he was one of the go-tos right during the pandemic. Then all of a sudden, people were very critical, and it's just been pretty volatile in terms of the perception of him. Great story, Chris. Thank you so much, Chris Palmieri. He's entertainment editor at Bloomberg News on the phone from LA.
Broadcasting live from the Bloomberg Interactive Broker Studio in New York. Bloomberg 1130 to Washington, D.C. Bloomberg 99.1 to Boston. Bloomberg 106.1 to San Francisco. Bloomberg 960 to the country. Sirius XM Channel 119. And around the globe, the Bloomberg Business app and BloombergRadio.com. This is Bloomberg Business Week.
So our next guest did, I think, roughly 3 years at one of the world's largest hedge funds, and then went really back to study it, and now has written about it.
Yeah, we're talking about Megan Tobias Neely, assistant professor in the Department of Organization at Copenhagen Business School. Also the author of Hedged Out: Inequality and Insecurity on Wall Street. She's going to join us to talk all about how the hedge fund industry can generate extreme wealth and who's actually benefiting from that.
Yeah, I'm looking
I'll give you one guess, Carol.
Yeah?
Yeah, white man.
Yeah, okay, yeah. Heard that before.
Yeah. I'll talk to her in just a few minutes. In the meantime, go ahead, Carol.
No, let's bring in Doug.
Oh, yeah, hey, Doug.
Yeah,
what's going on?
Yeah. Going on, well, it was all about green today for the equity market, particularly for the S&P 500, which was able to snap check that 5-day losing streak. The S&P gaining about 0.9% today. Energy was out in front with the S&P Energy Index up 3.4% today. Energy stocks track the price of crude oil higher. WTI in New York is back above 81 the barrel. Meantime, where the Dow is concerned, a gain of 0.5%, and for the Nasdaq market, the composite index higher by 1.4% today. I think generally speaking, the market is just feeling a little bit more comfortable with the Fed's position on fighting inflation. After Fed Chair Jay Powell said today the Fed will not hesitate to contain inflationary pressures by moving rates up. And at the same time, we had a number of Fed officials preparing the market for what seems to be the possibility of a quarter-point move at the March meeting. 10-year Treasury, though, we were down in yield by nearly 2 basis points right now at 174 as we prepare for trading in the Tokyo session. Semiconductor shares rallied today. We had the Philadelphia Semiconductor Index picking up about 2%. Dollar weakness, that's interesting, with the Bloomberg Dollar Spot Index down today by 0.3%. I'm Doug Krisner, and that's your Bloomberg Business Flash.
Got it, Doug. Thank you so much. So as we mentioned, she did 3 years at one of the world's largest hedge funds, went back to study, really understand, Tim, how they organize their work, how it restricted access, and just trying to get an understanding away from all the sensational headlines when it comes to the hedge fund world.
We're talking about Megan Tobias Neely, assistant professor in the Department of Organization at Copenhagen Business School. She joins us now on the phone from Denmark. Megan's also the author of Hedged Out: Inequality and Insecurity on Wall Street. Megan, how are you?
Good. Thanks so much for having me.
Well, thanks for joining us. I want to get to more on the book in just a minute, but first I want to hear a little bit more about your journey, because you did work as a research analyst at BlackRock a little more than a decade ago. So take us into your journey of working in the hedge fund world and then becoming ultimately an assistant professor and writing this book.
Yeah, absolutely. So I worked at BlackRock right out of undergrad in a research kind of support position, and I did all kinds of research on hedge funds that they were invested in. So everything from working on background checking to monitoring news, reviewing audited financial statements, all of these kind of information and plugging it in to help the work that the investment analysts making the investment decisions were doing. And what that did is just kind of gave me insight into a world I didn't know existed, and it really piqued my interest to study it because I realized what huge ramifications the hedge fund world has for society.
Well, I mean, it's interesting, too, because we certainly, right, the last few years in particular, maybe the last 5 to 10 years, we've really upped up the amount of conversations we're having about how do we create and improve diversity and inclusive environments, and certainly in the financial community where it feels like it's been behind the times in a big way. You know, is it better? Do you like the hedge fund industry? I'm curious.
So what happened, or what kind of made me study the hedge fund industry in this particular way and look at their workplaces, is I kept reading industry reports about how as much as 97% of hedge fund investments are managed by teams led entirely by white men. And that made me wonder, well, what about this industry enables such enormous concentration of wealth into such a small group of people's hands? And what about, gender and race in workplaces? What can that tell us about it? And what I found is that when you really restrict access to people who aren't like you, whether you do it knowing that you're doing it, which a few cases of that came up, or if it's just on accident because you think you're just hiring people who are a good fit or who are like you, what happens is that means you create an environment where you can really dictate your own terms. And what I found is that this contributes to their ability to do things like charge higher fees, have higher incomes, pay lower capital gains taxes. And it's really the result of creating this social world that's for themselves that's kind of walled off from others and people who aren't like them.
How do you make the connection to from this idea of this elite club to actually those folks who make the rules and allow them to pay less in taxes and allow them to have these beneficial tax strategies? What's the connective tissue there?
Yeah, so this is something that came up in my ethnographic research as well as other research I've done just on the kind of the ties between the hedge fund world and government. So whether it's in the Oval Office or with lobbying, at conferences I went to and observed and participated in the hedge fund world, there were often politicians there, lobbyists. It was very clear that they were interconnected in so many ways and doing things to put pressure on the government to make these conditions advantagegeous for them.
So, do you think things are getting better? Because I do think there's part of, people are, I think there's an increased awareness, Megan, right, of maybe these unconscious biasness that's out there, or biases, am I saying it right? Biases that are out there, and I do you feel like, because I feel like the conversation of the last couple of years, maybe it's because of the pandemic, we're just talking a lot more about this. Do you feel like it's gotten better?
I think that there is ways that people are more open to talking about it, but then also resistance on other forms. And this came up a lot in my research when I would tell them, what I was doing, what the focus of the study was on. And so I'm a white woman, and I would say, I'm studying inequality in the hedge fund industry. And often people would say, yes, gender is a big problem. But then they would say, but race isn't because it's a meritocracy. And so what I found is there's kind of resistance because of the way that inequality in the industry undermines this deep-seated belief in meritocracy, that everybody's there because they've worked hard, and that and long hours have paid off.
All right, sit tight for a second. Megan, we've got to do a little bit of news. Just kind of digesting everything that you're talking about. We want to talk a little bit more about, I'm curious about some of the people that you spoke to in order to put this book together, because you did talk to a lot, so we'll continue.
Yeah, I'm also really interested in the research methodology. I mean, I know you're taking this from an academic perspective, a perspective of ethnography, and I'm curious about how you went about that research and then how you put it together in a book here. So we're going to get much more on that in just a few minutes. That's Megan Tobias-Neely, assistant professor in the Department of Organization at Columbia Business School. She's, at Copenhagen Business School. She's joining us on the phone from Copenhagen, Denmark. She's the author of Hedged Out: Inequality and Insecurity on Wall Street. More from her in just a few minutes. In the meantime, a check of the latest world and national news. Nancy Lyons is standing by in D.C. Hey there, Nance.
Thanks, Tim. President Biden is speaking in Atlanta, trying to drum up support for voting rights bills. He says there's greater urgency, especially following the anniversary of the attack on the Capitol.
Today, we come to Atlanta, the cradle of civil rights, to make clear what must come after that dreadful day when a dagger was literally held at the throat of American democracy.
Biden says January 6th should mark a renaissance of democracy, not the end of it. He says he does support changing the Senate rules to prevent a minority of senators from blocking voting rights. Chairman Jay Powell says it's time for the Federal Reserve to shift from its economic emergency measures to a more normal interest rate policy. Bloomberg's Irv Chapman has more on today's testimony before the Senate Banking Committee.
Powell said while interest rates impact consumer demand, supply shortages are a major contributor to current inflation.
We do think we'll get, over the course of this year, return to normal supply conditions, and that's going to affect our policy. If we see inflation persisting at high levels longer than expected, If we have to raise interest rates more over time, we will. High inflation is a severe threat to the achievement of maximum employment and to achieving a long expansion that can give us that.
Powell said he doesn't expect that currently rising wages will create long-term inflationary pressure. In Washington, Irv Chapman, Bloomberg Radio.
The Oscars will once again have a host. The Academy of Motion Picture Arts and Sciences says no one's been selected yet, but it will be the first time there's been a host of the show since 2018. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Nancy Lyons.
Hey, Nance, thank you so much. We're going to get back to our guest, Megan Tobias Neely, in just a moment. Her new book, Hedged Out, Inequality and Insecurity on Wall Street. In the meantime, Alex Tanzi has a story on the Bloomberg about the surge in U.S. retirements during the COVID-19 pandemic led by older white women without a college education. This is according to some research by the St. Louis Federal Reserve.
Yeah, Carol, you talk a lot about what's behind the Great Resignation or who actually is coming back to the labor force. And as time goes on and we continue into year 3 of this pandemic, we're getting more data about who is leaving the workforce. This is about the so-called Great Retirement trend that saw workers leave the labor market, whether it was by choice or whether they were forced to. It was actually driven by baby boomers who were age 55 and older, according to the regional Fed Bank. By contrast, retirements among those aged 54 to 65, that was little changed.
Yeah, and it's interesting. I love these stats. Overall, there were 3.3 million or 7% more retirees as of October 21st than in January of 2020, a number that exceeds the expected demographic shift of the large baby boomer cohort out of the labor force. And they break it down even more. In terms of the pandemic retirees, female workers were more likely to retire than men, especially among those older than 65. White workers were more likely to retire than Black, Hispanic, and Native American peers.
Asian Americans were slightly more likely to retire than white workers of similar ages, and workers who were married or widowed were more likely to retire than never married or single peers.
Yep, workers with high school diploma or less education were more likely to retire than peers with at least some college education. Veterans were more likely to retire than non-veterans, especially among those aged 65 to 74. This is going to be the stats this year, last year, a couple years to come. Curious to see if it really is a significant new trend and tone here when it comes to workers.
Yeah, there were a host of reasons why people chose to retire during the COVID crisis. People lost their jobs, they feared for their health, they had to care for family members. Another one has to do with asset values booming, like investments in real estate that gave some Americans an opportunity to stop working earlier than they had hoped to, or earlier than they thought they would.
Your financial situation can often give you the security to say, okay, I'm done, I can retire. You're listening to Bloomberg. We're going to get back to our guest.
updates, headlines, and breaking news 24 hours a day at Bloomberg.com, the Bloomberg Business app, and at Bloomberg Quick Take. This is a Bloomberg Business Flash.
We are at 47 past the hour, and we had a lot of positivity in the equity market today after Fed Chair Jay Powell essentially indicated the Fed is not going to hesitate to act if necessary to contain inflationary pressures. And at the same time, we had a number of Fed officials that apparently were in the process of preparing markets for a possible rate hike as soon as March. That would be a quarter-point move. Interestingly, tomorrow we're going to get the retail inflation data for December, the CPI number, along with figures on real earnings. Now, those data points may have the ability to kind of spark a little bit of a repricing in risk assets. But for the moment, stocks led higher by energy for the S&P 500. We were up for the first time in 6 sessions, with the S&P today better by about 0.9%. Nasdaq Composite gaining 1.4%, Dow Industrial Average ahead 0.5%. We're getting indications that the government will limit now the coverage of Biogen's Alzheimer's treatment and similar drugs through Medicare to patients who are enrolled in clinical trials. And shares in Biogen right now weaker by about 5.6% in late trading. 10-year Treasury last quoted in New York, 1.73%, and we've got crude oil back above 81 the barrel after a rally in New York that had WTI up 4%. I'm Doug Krisner, and that is your Bloomberg Business Flash.
Thank you so much for that update, Doug Krisner. Let's get right back to Megan Tobias Neely, assistant professor in the Department of Organization at Copenhagen Business School. She joins us once again on the phone from Copenhagen, Denmark. She's the author of Hedged Out: Inequality and Insecurity on Wall Street. Megan, I want to go to get an understanding and contextualize this for our listeners right now. Take us through what you found in your research about the demographics of the hedge fund industry. And I think a lot of people wouldn't be surprised with it's overwhelmingly white male, but I'm also wondering how that compares to other industries, perhaps other parts of the financial industry, like private equity, for example. Is there a big difference between what you see in demographics-wise in hedge funds versus other parts of finance, or is this a widespread issue with all of finance?
Yeah, I think this is a widespread issue of all finance, and that's what has come up in my other research that I've done on the financial sector more broadly. And this is something that comes up in these kind of skewed numbers come up in private equity. It also comes up in venture capital, as well as when you go up the organization charts in investment banks and large asset managers. The more money and kind of rewards are held, the more homogenous the group of people who hold them is, and it's skewed very white and held by white men.
So I love that you talk to a lot of individuals for your book. I think, across the industry, lots of interviews, insiders in New York, Texas, California. So you really got a good feel. Tell us about some of those conversations, Megan, and what jumps out in terms of what you learned.
Really. So I conducted in-depth interviews with dozens of people working at hedge funds, and then I observed them and kind of participated with them in all kinds of conferences and networking events, so I could understand firsthand what they were explaining to me in their interviews. And there were a few things that really stuck out to me. So one is how relationship-based the industry is. So people learn mostly on the job at hedge funds. You don't really learn how to run a hedge fund in business school. You learn it by having kind of an apprentice relationship from a hedge fund manager. And so that relationship sort of is at the crux of these organizations and is what leads it to become so skewed towards supporting other men and often other white people. And this came up, even the people I interviewed described it as patrilineal. They said you'll see these kind of relationships where one generation teaches the next generation who teaches the next. And that really struck me because you don't think of that. It sounds so sort of old-fashioned. You don't think of that as happening on Wall Street in this kind of master-apprentice way, but it really does.
I'm wondering about implications of this and really what you were able to find.
Yeah, so one thing that what happens with this is that you end up with hedge fund managers who groom people who look like them, who remind them of themselves, kind of into their style of investments, and then they often actually invest in them. So they might provide seed money to start an investment firm, and this bolsters their own wealth. So a classic example of that is of the Tiger investment firms, Tiger Asset Management, and all the what are called the Tiger Cubs and Grand Cubs, which are all these investment firms seeded by the original firm. And this allows these kind of tight networks, allow that all the people within them to then bolster their fortunes and make even more money. And what it does is it kind of solidifies their power over time as they pass these investments on from one generation to the next.
So if you were sitting down teaching a school at business school or getting up and doing a TED Talk, which you've got to kind of summarize it pretty quickly and get to it, what would be the main points you'd want to make? And I mean, do you find these institutions and the hedge fund community bad? Are they evolving?
Yeah, so I would say, we, as a sociologist, I don't think of people as inherently good or bad, but rather the product of where they work. And so in hedge funds, they face this unpredictable and risky stock market that firms turn over. There's this sense of insecurity, even though they make, really large incomes. And then there's this prospect of exceedingly high rewards that kind of motivate them to protect their interests and network with one another and work exceedingly long hours. And what this does is it allows them to sort of hedge some people into this club or this protective boundary, while also hedging other people out. And it is that act of keeping some out and others in and training them into their kind of model of investments and the way they run their organizations that then allows them to land these high incomes that are driving income inequality upward in the United States and elsewhere.
Does the industry change, or does it even have the impetus to change?
So I think it has changed over time. I mean, it has become more institutionalized as institutional investors have become the majority of the investors over time. There's more pressures, and that's kind of where perhaps the fight for changing the demographics of the industry might come from, is from investors, large asset managers and pension funds saying, we'd like to see change in how this is done. Of course, the people I interviewed also cited, though, that can create a fiduciary duty, a conflict of their fiduciary duty to provide the best returns in terms of how they invest. But at the same time, I think that institutional source of change could perhaps put pressure on these firms to kind of change their practices and think a little more critically about who they hire, who they promote, and who they invest in.
Well, it's interesting. You write a lot about, as you've talked about the pipeline problems, but maybe we need to kind of think about it a little bit differently. Certainly a lot of food for thought. And Megan, we really appreciate your time today. Megan Tobias Neely, she's assistant professor in the Department of Organization at the Copenhagen Business School. She joined us on the phone from Copenhagen, Denmark. Her book out, it's called Hedged Out: Inequality and Insecurity on Wall Street. And I just think about the conversations that we've had about diversity and inclusion over the last couple of years, and we have to be careful not to necessarily be drawn to some of the sensational headlines and really look deeper into what's going on. And she really, had a good understanding of what's been going on in that industry. Yeah, and also a unique background, given the fact that she was an insider, somebody who was a hedge fund analyst early on from 2007 to 2010, and got a good understanding for, what makes what are these comprised of? Yeah, exactly. All right, speaking of having a good understanding, our Joe Matthew, he is the host of Sound On. Joe, what's on tap today? Is it warm in Washington, or is it freezing like New York?
We're freezing down here. The snow hasn't melted yet, but we're, what are you going to do? I guess that's kind of what January
It's winter, right?
Yeah. So we have twin leads today. You guys saw the Powell testimony, a big moment coming out of Washington, although I thought maybe we'd have a little more fireworks action going on. But French Hill is going to join us, the Republican congressman from Arkansas, House Financial Services. He's a real Fed watcher. We're going to have the inflation conversation from the Republican side of the aisle. And later on, Georgia's Secretary of State, Brad Raffensperger, will be here as Joe Biden hits Atlanta to make the case for voting rights.
Do you want to build a snowman? Joe Matthew?
Snow angels, I'm telling you, that's my thing.
No, come on.
There's so much easier.
Frozen, Elsa, work
Actually,
with me.
This is really good snowball snow, so I'm with you.
Gotta run. Have a good evening, everybody.